Varun Das and Mr. Casper, conceptualizing and organizing this grand platform.
I really want to thank TV9 Group, and it's a harbinger of many things to come.
Hello and welcome, I'm Suyash Maheshwari and you are watching Morning Brief at 9, a show where we dive into the latest updates on stock markets, finance, business and economy with all the key insights you need to stay ahead of the curve today. Now let's start with a big one. In a surprise move, the government has appointed Sanjay Malhotra as the 26th governor of the Reserve Bank of India, succeeding Shaktikanta Das, whose 6-year term ends today. The announcement came just hours before Das's tenure concluded as Malhotra takes on one of India's most influential roles. At 56, Malhotra, an IAS officer from the 1990 batch, is set to serve a 3-year term starting December 11th. Known for his meticulous approach and detailed insights, Malhotra has been instrumental in handling budget proposals and preparing for the upcoming GST Council meeting. A graduate of IIT Kanpur and Princeton University, Malhotra has extensive experience in financial services, having previously served as Secretary of Department of Financial Services and as a government nominee on the RBI Central Board. His appointment highlights a preference for civil servant leadership, continuing the trend set by Das and indicating continued coordination between the centre and the RBI. Malhotra's appointment marks him as the third IITian to head the RBI and the second to do so, following R.N. Malhotra, who led from 1985 to 1990. Shifting focus to global news, China now plans to adopt a more relaxed monetary policy in 2025, its first such shift since 2010, aiming to revitalize its slowing economy. Now, state media reports that the Politburo has committed to unconventional fiscal measures and strong counter-cyclical adjustments with a strong focus on boosting domestic demand and consumption. For China, this signals a strategic pivot to counter global economic pressures. Although for India, it could mean increased competition in global markets, especially as China seeks to ramp up exports. On the flip side, India may benefit from lower commodity prices as China prioritizes internal consumption over large-scale industrial output. In a major move, market regulator Sebi has issued a cautionary note for investors, urging them to steer clear of electronic platforms and websites that facilitate transactions in unlisted securities of public limited companies. These platforms operate outside Sebi's regulatory framework, making an interaction with them a breach of its rules. Sebi emphasized that such platforms lack authorization or recognition, warning investors not to conduct transactions or share sensitive personal information on these websites. This serves as a reminder for investors to stay vigilant and ensure they engage only with regulated and legitimate avenues for their investments. Now, Syrians awoke on December 10th to a mix of hope and uncertainty after rebel forces seized the capital Damascus and President Bashar al-Assad fled to Russia, ending 13 years of civil war and over 50 years of his family's authoritarian rule. A swift and decisive campaign by Syrian rebels in recent weeks led to a rapid collapse of government forces, prompting Assad and his family to leave the country. The dramatic turn of events sparked celebrations across Syria, though many residents remained wary about what the future would hold for them. The rebel victory had given residents hope that after over a decade of conflict, the nation might finally move towards stability and normalcy. Now, considering the ongoing tensions in the Middle East, oil prices, they jumped by over 1% as Syria's political upheaval added uncertainty to already volatile Middle East. Brent crude is trading near $72 a barrel, while US crude stands at about $68 per barrel. Meanwhile, the Indian rupee has hit a fresh low of 84.9 against the US dollar in non-deliverable forward market, signaling concerns over a potential shift in RBI's currency intervention strategy under the new governor. In a noteworthy development, the government may discontinue sovereign gold bonds or SGBs starting financial year 26, citing a focus on reducing debt. This could impact gold demand and alter investment dynamics, especially during India's festive season when gold sees peak interest. Alright, we have a very special guest joining us on the broadcast, Nishchal Maheshwari, who is an independent market analyst. Now, sir, I want to begin by asking, about this news that we are getting there. There are reports that the government may, in fact, discontinue SGBs. How could the discontinuation of SGBs influence gold prices and investment patterns in India, especially for the small investors out there?
So, morning, Suresh. I've not seen this news, but I think when the SGDs were bought in, basically, it was largely to cater to the investment demand in gold. So, I think that is going to take a bit of a backseat, especially for the small investor. Larger investors obviously have got international exposures, and they can actually go out and buy larger quantities of gold in physical. So definitely, I think this is going to be a bit of a setback for the smaller investors.
Well, the RBI has also appointed a new governor. Sanjay Malhotra is set to take, the seat or the helm of RBI starting December 11th. Now, he is up against a trilemma, boosting growth, controlling inflation and stabilizing the rupee against the dollar. In your view, which of these will be his toughest challenge and why?
I think the toughest challenge would be stabilizing the rupee, because the other two things, I think one is already the inflation is already on the downward, and largely the inflation is led by the vegetable prices. So I think post this November or December, basically, as the earlier governor had said that he expects inflation to come down in starting next quarter. I also believe so. The international situation just continues to remain very volatile. You have a new president joining in the US, and that's why I think the dollar has been very, very strong. And then you have a volatile Middle East. So I think these are two things basically which are not in the control of the governor, and that directly influences the rupee. So I think that will be the biggest challenge for him.
All right, let's also look at some of the global trends that are coming in and how that could influence the stock markets here in India today. Now, Chinese stocks, they rallied on Tuesday, fueled by optimism across the region after Beijing announced plans to for rate cuts and measures to boost consumption. Now, the Shanghai Composite surged by about 1.5%, while Hong Kong's Hang Seng gained 1%. This optimism spilled over to the MSCI Asia Pacific Index, which climbed about 0.3%, and Japan's Nikkei, which added about 0.4%. The move supports commodities and currencies like the Australian dollar, but global markets remain cautious ahead of key US inflation data. Speaking of US markets closed in the red on Monday, weighed down by a sharp drop in Nvidia share prices. The Dow fell over 0.5%, while the S&P 500 and the tech-heavy Nasdaq both declined by about 0.6% each. Nvidia slid 2.5% after China's antitrust regulator launched an investigation, sparking concerns across the tech sector. Other chip makers felt the heat too, with AMD tumbling 5.5% following a downgrade by BofA Global Research. Meanwhile, Oracle saw a 7.5% drop in extended trading after missing revenue expectations, and Comcast lost 9.5% on weaker broadband subscriber forecast. Alright, Nishal, we are seeing some bit of a bullishness in Asian markets. The markets over here are yet to open. Especially China is what's driving the sentiment as far as Asia is concerned. Do you think Indian markets will benefit from this, from a positive rub-off effect? Also, the US markets are facing some bit of a volatility ahead of the upcoming inflation data. What impact could that have on Indian markets?
So I think Indian markets are on an even keel basically at the moment. I do not see much reason to feel worried about it. As we were talking earlier, I think the inflation seems to be okay. I believe there is going to be a first rate cut, which is most likely to be in February. So I do not see much reasons to worry on the Indian side. The only worrying point is the demand. As more and more FMCG companies are coming out and saying basically that the demand is not reviving at the rural as well as the urban level. So that is a more worrying feature basically. So, but one of the reasons which I've been able to figure it out is basically that in the last 6 months, given that there were so many elections and general election was there, government spending has come down dramatically. And as we see government restarting that spending, we start seeing very, very large orders coming out basically on the infra side. So I think that should spur the economy again and the consumption again. So not much to worry about as far as India is concerned. Globally, yes, inflation data is to be looked very closely in the US. But I think another rate cut is definitely on the cards in US in December.
Let's shift focus to Indian markets because they are about to open in just a couple of minutes from now. Now, after a strong rally since mid-November, Indian markets have seen some selling pressure over the last couple of days. The Nifty has climbed almost 1400 points or about 6% since November 21, but it's now facing resistance around the 24,700 level, which has in fact resulted in a 2-day selling streak. However, the broader markets are holding up well. Both mid-cap and small-cap stocks have continued their positive run with modest gains yesterday. In fact, these indices have gained around 10% and 11.5% respectively over the past 12 sessions. On the investment front, foreign institutional investors or FIIs have been net buyers in the cash market, pouring in over 25,000 crore rupees into the Indian stocks this month alone after pulling out funds in the last couple of months. Meanwhile, domestic institutional investors, which remember have been providing constant support during the the sell-off that we were witnessing from FIIs, were offloading shares yesterday. They have offloaded shares of to the tune of about 1600. Now, GIFT Nifty is also indicating a sort of a flattish to negative start on December 10th. Tracking cues on GIFT Nifty, that's trading about 24,717, down by about 0.05%. So a flattish start, and this trend is as of 8:45 a.m. this morning. Nishal, I'll come to you over here. Now, very interesting thing happened yesterday. I mean, in fact, if you look at the month of December, FIIs, they have returned back with strong buying. But domestic institutional investors, at least yesterday, they were selling. They have been pretty much providing support to the market in this correction that we had seen in the previous 2 months. But what could be the reason behind this shift in strategy? Should this be something retail investors should be worried about?
I don't think so. These are all temporary things basically. Nifty is in a broader range of 24,700 and the upper side, and 23,800 on the downside. So I think 1,000 point is a good number basically for anybody to trade. So I think most of these institutions, especially domestic ones, must be booking some amount of profits. And again, this is the end of the year internationally. So I think as you approach closer to December end, you will see activity dropping basically, and people who have people generally go out on leaves and all. So activity will definitely drop, and levels of interest will go down. But I think the yesterday selling is largely profit taking. I don't see any other reason for them to change any strategy, and I don't think so they have changed any strategy.
Nishal, I'll just push in one question before the market opens. While the broader markets, they have, the headliners, they have been witnessing some selling pressure in the past couple of days. The broader markets, they seem to be doing pretty well. In fact, they are on a 12-day winning streak. Both mid-cap and small-cap indices have rallied by about 10 to 11.5% in the last, since mid-November. And that has really helped the breadth of the market. Even when the market was falling, the overall sentiment, or at least the advance and decline ratio, which indicates how many stocks are rising compared to how many are falling, that was in the favor of bulls. What's your view on the broader markets? Will this rally continue as we had seen in the past 12-15 months?
So I think there has been a bit of disappointment in the second quarter of earnings basically, and that's why you've seen this kind of a sell-off which happened in the Indian markets. Now we have to wait because I think there are still some worrying signs on the horizon because demand doesn't seem to be reviving as most of the FMCG companies and consumption companies are talking about. So I think that is a worry. But as I was telling you earlier, as the government comes back and starts spending again, that should give a support to the earnings momentum. But I think the quarter three would be a bit subdued, and you would see a revival again in the quarter four as far as earnings is concerned. So market is waiting for a clear direction, and that's why you're not seeing a much broader rally or a much sharper rally from here. But I think market is anticipating this government spending and the revival to happen. And inflation to fall. So that's why I think markets are in a more of a trading zone at the moment. I do not see a big movement in either side.
All right, the markets have in fact opened and we are seeing a bit of a positive start for Nifty 50 and the headliners. Nifty 50 is up by about 0.05%. The trends were indicating a flattish to negative start, but we have seen a positive open. Nifty is currently hovering above the 24,600 mark. So good to see that Nifty is at least holding on to the 24,600 sort of levels. The mid cap and the small cap indices, they continue to drive the markets higher. Both indices are trading in positive territory. Small cap index as we speak is up 0.2%, while mid cap index is up 0.1%. India VIX, that has picked up slightly, but we are closer to 14 levels than we were to 15 levels. So good to see India VIX hovering below, in that 14 to 14.5 range. And speaking of sectors, some selling pressure in the banking and auto stocks. Auto stocks are down about 0.1%. Banking stocks are down 0.05% as we speak. Although the private banks, it's the private banks that are pulling the banking stocks down. But broadly speaking, trends are looking positive this morning. Some of the sectors that are driving today's market is Pharma 1. It's up about 0.3%. Metal stocks are also trading higher, probably on the back of this boost and interest rate cut that we are to see in China. So a good start to the day. Nifty holding above the 24,600 mark. Sensex is also trading in the positive territory above the 81,550 levels, and this is as of 9:15 a.m. this morning. The markets have just opened. We are bringing you the latest numbers. All the sectors, as you can see on your screen, most of them are trading in the green. Banking stocks are seeing some bit of a selling pressure, and that is primarily because of the private banking stocks. They are pulling down the market. Meanwhile, oil and gas stocks are also seeing some selling pressure, and that is primarily due to this 1% rally that we saw in Brent crude. Remember, we are net importers of oil, and several of these industries are exposed. Not only it adds to inflation, but for oil marketing companies, BPCL, HPCL, in fact, Reliance also comes to mind. Or for them, it's a negative trigger. Although it's just a sentimental sort of a trigger, we should not really track one day moves to draw a broader sense or draw broader conclusions about the market. But Nishal, I'll come to you. You were saying the market needs further impetus to rally from here on. What could be that, and how should retail investors who are looking at the markets? They have rallied by about 6 to 6.5% from November low, and that run up has come quite swiftly. I think most of us were not expecting that sort of a rally. At the current juncture, what will be your advice to retail investors? How should they approach the market, in the next couple of months?
I think the best way to for retail investors is go through the mutual fund, do the SIPs more regularly, and that is what they should be doing instead of trying to go through the market directly. Avoid trading, because I think this is going to be more of a sideways movement basically, and we do not see much volatility in the market. So if you want to really do directly, basically wait for a dip, it will come, and that's a time basically to invest rather than rushing into the market now.
And Rishal, any sectors that are on your radar? Because we have seen certain sectors like IT and pharma outperform at a time when the market was falling. They have pretty much held on to the gains, but there are where, in fact, I would like to take it to you. Where do you see pockets of opportunity in a market like this?
I was telling you earlier that the government investment is going to start happening in the second half, and I think there are opportunities both infra sector, so infra EPC players, cement, metals. These are some of the sectors basically which are going to benefit out of government's orders. We already started seeing orders coming in. There is a big railway order last week for Kavach of 10,000 crores. So I'm saying that is the size of orders which the government gives out. So I think some of the sectors, railways also could be looked at. So railways, power, infra, cement and metals. These are, I think, 4 or 5 sectors one should focus for the next 2 quarters.
Right. Railways, infra are some of the sectors that are on the radar of Nishal Maheshwari, sectors that will see will benefit from the increased government spendings that are to come in the quarters to follow. Nishal Maheshwari, always a pleasure speaking with you, sir. Thank you for your time and thank you for the great insights. With that, let's take a short break. On the other side, Avni Bhatt joins us very soon. We also have a lot of news from the global arena as well, so stay tuned.
You're watching the day's biggest news update. Shriram Finance, the nation's dependable finance partner, has tied up with Mr. Dependable. Rahul Dravid can be seen delivering the message of unity. Rahul Dravid is renowned for his team spirit and the ability to take everybody along. Similarly, Shriram Finance is standing with every Indian to help them turn their dreams into reality by offering them the best financial solutions.
जब जुड़ेंगे तभी तो उड़ेंगे.
श्रीराम फाइनेंस. तो क्या अगर आज सिर्फ 2 हाथों की करामात है, कल कई हाथ सपना बुनेंगे. तो क्या अगर अकेले बीज बोया था, उस एक बीज से बगीचा खड़ा करेंगे. श्रीराम फाइनेंस हर इंडियन के साथ खड़ा है क्योंकि भरोसा है हमें.
जब जुड़ेंगे तभी तो उड़ेंगे.
श्रीराम फाइनेंस.
India spends $75 billion on foreign cargo vessels.
$75 billion per annum. You know, that's a lot of money.
Imagine a situation where 95% of our cargo is coming on ships which are not owned by us. If we are still not prepared, if someone were to say that we are not going to give you ships, then we'll be stuck. So the entire nation's economy is at risk.
We are very clear that shipping is also strategic, because without that you can't really be the 3rd largest economy in the world.
This and more. Streaming on NEWS9 plus news is now content. Subscribe and get free vouchers.
Jonty Rhodes and Alan Donald, they're kind of the reason why I started playing.
I think most young spinners, when they're growing up, Shane Warne was just everything, wasn't he? He was one of the greats of all time.
Playing against India was always challenging in India.
We're not allowed to bowl a bouncer, so that tells you that they want to see runs on the board. Clean board.
Totally different era you in and we are in.
This and more. Streaming on NEWS9 plus subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at 9 here at NEWS9, and with that, let's also take at some of the news from the global arena as well as domestic news that are making headlines today, and that could probably impact your finances. So very important for you to track. And let's start with what's going on in South Korea. Now, in a dramatic turn of events, South Korean President Yoon Suk Yeol has been banned from leaving the country following a failed attempt to impose martial law. A Justice Ministry official confirmed the travel ban amid mounting pressure for Yoon to step down. President Yoon has apologized for what he called a botched attempt but has stopped short of resigning. Currently, he remains under criminal investigation, leaving his political future in limbo. This comes as Yoon narrowly survived an impeachment vote in parliament over the weekend. However, his party's move to delegate presidential powers to the Prime Minister has thrown the nation into a constitutional crisis, raising concerns about the future stability of this key US ally. Shifting focus, in a remarkable display of innovation, Tesla's full self-driving software version 13.2 successfully completed a 1 hour and 40-minute drive through the bustling streets of Los Angeles without any manual intervention. The supervised journey took place between Santa Monica and Torrance, going through some of the most congested traffic conditions in the country. Now, this surely offers a glimpse into how autonomous driving technology could transform the daily commute for millions of people around the globe. Remember, Tesla's advancements continue to push the boundaries of what's possible in the automotive industry, with eyes now on how this technology will evolve further. Now, rising Rajasthan Global Investment Summit kicked off yesterday with corporate India loosening its purse strings and making investment commitments. Vedanta Group's chairman Anil Agrawal has pledged to invest 1 lakh crore rupees to augment natural resources like zinc and oil production in the state, thereby creating 100,000 jobs in the state. Aditya Birla Group chairman Kumar Mangalam Birla stated his speech by recounting his family roots from Rajasthan and began his speech with Padharo Mare Desh, and eventually said his company will invest 50,000 crore rupees spread over renewable energy and cement production. Renewable energy stayed a priority for corporate India, even as Anand Mahindra said his company will invest 11,000 crore rupees to expand its solar energy installed capacity and create over 5,000 jobs. But the biggest of them all, Adani Group CEO Karan Adani, has pledged a massive 7.5 lakh crore rupees over the next 5 years across the construction of 4 new cement plants, building the world's largest green energy ecosystem with 100 gigawatts of renewable energy. Remember, Prime Minister Narendra Modi inaugurated the summit yesterday. That will continue until tomorrow, which is December 11th. Now, Tata-owned Air India is taking a major step towards global expansion. The airline has confirmed a landmark order for 100 Airbus aircrafts. This deal is part of Air India's ambitious multi-billion-dollar strategy to transform itself into a leading player on the global aviation stage. More details are in this Reuters report.
Tata Group-owned Air India has confirmed an order of 100 Airbus aircraft. It's part of a multi-billion-dollar plan to turn itself into a leading global airline. In October, Airbus announced an order for 75 A320 jets and 10 A350s by an unnamed customer. Sources said it was likely to be Air India. The Indian carrier has now confirmed it's placed an order for 90 A320 family jets and 10 A350 wide-bodies. The deal is thought to be worth around $6.4 billion. Since taking control of the company in 2022, Tata Group has spent billions on ordering hundreds of new jets. It's also changed the carrier's logo and is upgrading interiors for over half its fleet to take on rivals Emirates and Qatar Airways. Last month, the airline merged with Vistara, a joint venture between Singapore Airlines and the Tatas. Singapore Airlines holds a 25% stake in the merged carrier and has agreed to invest up to an additional $600 million in Air India's turnaround.
Shifting focus, in a major development, automakers across the board, from entry-level hatchbacks to luxury models, have announced price hikes starting this January 2025 rather. Maruti Suzuki, the country's largest car maker, plans to increase vehicle prices by up to 4%, citing rising input costs and operational expenses. Rival Hyundai Motors India has also announced a hike of up to 25,000 rupees effective from 1st January 2025. While manufacturers attribute this increase to higher costs, industry experts note a yearly trend that automakers often implement hikes in December to boost year-end sales as buyers delay purchases to secure newer models. The move comes as profitability for several large automakers dipped in the second quarter of financial year 2025, adding further pressure to adjust pricing. A Noida-based company, Yes Madam, is facing major backlash after reportedly firing over 100 employees who disclosed experiencing stress during an in-office survey. According to a LinkedIn post, the home salon services firm informed staff via email that their terminations were effective immediately. The issue gained widespread attention on social media, drawing heavy criticism from the public. Allegations suggest that Yes Madam conducted a mental health survey and proceeded to dismiss employees who admitted to feeling stressed. My colleague Krishna Kumar discussed the implications of this move by Yes Madam with distinguished HR strategist Prabir Jha. Listen in.
Prabir, shocking. I mean, inhuman is the first word that comes to your mind when you look at the situation. You do a survey in which you're trying to understand who are the most stressed, and then you eventually let those people go. It sounds apocalyptic, so to speak.
Absolutely, Krishna. Thank you for having me on your show again. And it is absolutely abysmal. It is shocking. And if it's a startup, one expected startups to behave a little differently in a more evolved, at least a more human and humane manner. This is absolutely unthinkable. You do not do a survey and use the outcome of a survey to trace exactly who has responded and then to take action. And I saw that email, and I think that tongue-in-cheek is definitely not having appropriate humor. It is. I feel so embarrassed as a corporate leader, as a corporate thinker, and something has very dramatically gone wrong. Now, who took this call? And I'm sure because it's a startup, it must be the promoters, and it speaks very poorly of the startup ecosystem. If this is the kind of culture that companies are going to have, there is no question about they being destinations for good talent.
All right, let's also look at how the markets are doing. They are pretty much trading with a flattish bias, but some of the contributors, the major drivers of the markets, let's look at them. And it's Infosys that's actually holding up the gains for the markets. The biggest contributor on the positive sides for about 39 points. That's Nifty. That Nifty is trading higher. 8 of them are coming from Infosys. Bajaj Finance is another one driving the markets higher. Power Grid Corp, Tata Motors, L&T, HCL Tech, all positive contributors driving Nifty, keeping it at least flat, if not falling from here on. Remember, there are pricing pressures, and on the other side, Reliance Industries is actually down about 0.3%. Mahindra and Mahindra is also falling, and one of the biggest negative contributor for the market. It's down by about 0.86%, but 5 of the 33 points shortfall that is coming from the markets is because of Mahindra and Mahindra. Another stock, while Infosys is adding to keeping Nifty balanced and keeping it moving higher, TCS is putting price pressure. The stock is down about 0.43% and is one of the top negative contributors for the market as we speak. Maruti, Trend, Titan, all putting price pressures on Nifty, and we are looking at the Nifty 50 constituent stocks, and that's a breakdown for you on your screen. Look at how the markets are moving and all the positive and flattish contributors. HDFC Bank, the biggest, which has the biggest allocation in that Nifty 50 basket, is trading with a flattish bias, not adding much to the price upside, but not even limiting the downside. And with that, let's take a short break. On the other side, we have a very special guest joining us, Avni Bhatt. So stay tuned.
India's neighborhood has been in turbulence all throughout.
Sheikh Hasina was forced to resign and take refuge in India.
Myanmar itself is facing an enormous internal crisis of sorts.
Periods of India's greatest strength was when the neighborhood did not have a problem with it.
There are events that are larger than your ability to control them. What you have to do is to make the best of those events and move forward.
This and more. Streaming on NEWS9 Plus. News is now content. Subscribe and get free vouchers.
Considered a wonderful product when it was invented. It solved many problems of human lives. We are talking about plastic.
Did you know the plastic in your house is as old as the oldest person in your family?
India almost produces somewhere around 9.3 million metric tons of plastic every year.
It is not dissolving, it is not evaporating, it is not vanishing from sight, it is just breaking down into our soil and ocean. So plastic is just going to be there.
So we need to go back to the questions, we need to go back to the start. When did water bottles come to our consciousness? Why was it marketed like that?
This and more. Streaming on NEWS9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at 9, and the markets, they are at least not falling. Let's talk about that, because Nifty has been, has faced some bit of a price pressure around that 24,700 levels. We have tried to take that out, but have not been able to do so. In fact, Nifty is witnessing some bit of a pullback this morning as of 9:30 a.m. It's trading with a flattish to negative bias, still holding above 24,600 mark. So we have, in fact, stayed above the closing of yesterday. In fact, it's trading with a flattish bias on the positive side. The broader markets, they are mixed. Mid-cap index has turned negative. The small cap index continues to rise. It's up about 0.15% as we speak. But the broader markets, the kind of rally that we have seen in the past 12 sessions, where they have constantly added to the momentum in the market. In fact, both indices have risen by about 10% each in this, since hitting a November low. And in fact, the small cap index is very close to its fresh lifetime high. So the broader markets are seeing some bit of a choppiness, but that could be understandable. Perhaps some bit of a profit booking we are witnessing over there. Good to see India VIX normalize. It was, trading higher in the morning. It was up by about 3% or so, but now it's at a moderate loss of about 0.08%. Holding above the 14 levels, but closer to 14 than 14.5. So always good to see that. But we have a very special guest joining us at the moment. That's Avni Bhatt of JM Financial. Avni, thank you for giving us time here on NEWS9. Plenty of stocks to talk about today. Let's start with Dabur, because Reserve Bank of India has approved Dabur's promoters, the Burman family's plan to acquire an additional 26% stake in Religare Enterprises. This follows a long battle for control of the non-banking financial corporation. RBI's approval is valid for a 1-year period as per the report in the Economic Times. It comes with conditions including maintaining the current management structure and requiring consolidation of NBFCs within the Burman Group by March 31st, 2026. I'll start with Dabur first. Seeing some bit of a price pressure this morning. In fact, if you look at it, it has really performed poorly. In fact, the entire FMCG pack has been very disappointing in 2024. But Dabur stands out. It's in the news. Typically, the company that acquires another company sees some bit of a price correction, and I think we are witnessing that in prices. But we have got a 1-year chart. Nifty is down. Dabur is down somewhere around 10%. In today's trade, it's down marginally, 0.2%. Avni, I'll come to you on Dabur. FMCG pack, yes, of course, they have been facing pressure. But does Dabur stand out over here, considering that we have seen sharp correction this year?
Good morning, Suyash, and a very good morning to all the viewers as well. So yes, Dabur has been the worst performing stock in the entire FMCG pack, although the entire sector has really not lived up to its tag of being a defensive, because it fell when the markets were falling, and it's correcting when the markets are doing good. So FMCG has really disappointed investors. But among this entire space, Dabur has been the worst performing stock, and currently also, if from a very, very short term perspective, if you look at it, if it breaks yesterday's low of 503, it can further come down. There are no triggers that can see even a small bounce back in this particular stock. So I'm expecting if 503 is breached, then we may see a retest of around 485 levels on the downside.
All right, that's a view coming in on Dabur, but let's also talk about Religare, because that's actually performing phenomenally well. It's up about 5.5% as we speak, and it's actually gaining traction at one point. In fact, it has hit a fresh 52-week high of 304.6 on the NSE. Stock has been on a phenomenal run. Avni, in the last 6 months, has delivered returns in excess of 35%. Year to date, it's up somewhere around that mark as well. But, again, in the lead up to this news of acquisition, the stock has done phenomenally well. If you look at the 1 month returns, Religare has rallied close to 18%. In fact, over 18%. Can this momentum continue for Religare? Avni, what's your view?
Yes, definitely. The stock has given a new breakout on weekly and monthly charts, and it's out of the woods and it's moving up higher. And we expect, after such a huge gap up opening and such a huge gain, single day gain, there can be retracements. It can come down to somewhere around 289 to 290 levels. That will be a good level to buy the stock again. In a coming few weeks to probably a month or so, we should be seeing the stock moving up to around 380 levels, which were the previous highs of that particular stock. So stay positive. If someone has bought it at lower levels, hold on to the gains. You are going to see further gains coming in the stock. Someone who has missed the rally can enter into the stock once it comes to around 290.
All right, those who have missed the rally, wait for it to normalize to around 290 sort of levels. That's a view coming in on from Avni on Religare. It has hit a fresh record high, 52-week high. In fact, in today's trade, after the news came out that Dabur is going to take controlling stake in the company of 26%. But moving on, another stock that has been making rounds is Vodafone Idea. Now, the board of Vodafone Idea yesterday approved a proposal to raise 1980 crore rupees from entities belonging to promoter entity Vodafone Group PLC through a preferential issue. Vodafone Idea will issue shares to Vodafone Group entities Omega Telecom Holdings and Usha Martin Telematics worth up to 1280 crore rupees and 700 crore rupees respectively. The issuance will involve 1.75 billion equity shares with a face value of rupees 10 each. Now, the issue price will be rupees 11.28. Avni, let's look at the stock. It has faced some bit of a price pressure. In fact, if you look at the stock year to date, it has fallen over 50%, 52% rather. But again, nothing coming in the way of this fresh equity and the fresh capital that they are raising. The stock has not really convinced investors. In fact, even in a 5-day period, the stock is down. But some bit of a momentum building up in today's trade. The stock is up about 0.5%. Has really stabilized around that 8 rupee mark. Do you think if it can spend some time there, it could perhaps make a move towards that 14 sort of levels that we had seen just a couple of months ago?
Absolutely, Suyash. As you said, the stock is not really, all the good news also. It's unable to sustain in spite of all the good news in the market. And basically, the sentiment has gone really bad on the stock. And investors are just looking to get out of their stuck positions at higher levels, which they had purchased earlier. So I don't see the stock going above 9 rupees in any case. Any good news today also, the news has been good, but in spite of that, after opening, we're seeing a lot of selling pressure, a lot of booking out. So at every rise, investors are going to look for exit opportunities. And we could, in fact, see a downfall up to around 6.5 again. So use any kind of pullback rally to get away from the stock, to exit your stock. And there are many better plays in this segment where, we'll find momentum in coming few days.
All right, Avni, let's move on and let's talk about another stock that's in the news today. Now, Tata Motors has announced that it will increase the price of its passenger vehicles, including electric models, by up to 3% starting January of 2025. The price hike is aimed at partially offsetting the rising input cost and inflation. The exact increase will vary depending on the model and variant. Now, this follows similar moves by other car makers, including Maruti Suzuki India, Hyundai, Mahindra & Mahindra and JSW MG Motors, who have planned price hikes for the coming month as well. Now, Tata Motors, Avni, let's get your view on that as well. The stock has been trading pretty much flattish. It got to that 1180 sort of levels. It has fallen sharply from there, corrected by about 20% or so, but witnessing some pullback from that 780, 790 sort of a zone, and it has been, holding above that 800 levels. Do you think that price hike will provide the further impetus for the stock to rally from here on?
In this case, Tata Motors, we often hear that people saying, analysts saying, the entire community saying buy on dips when the stock rallies. So this is the dip that you have in hand right now. It's a fantastic company, and going ahead, it has, the important point is it has consolidated quite a bit. It is not making further new lows. So that's a very good sign. And once the momentum picks up, I think it's a good time to accumulate. So one can look at it from an investment perspective and not from short-term trading perspective. It may spend some time over here in this area of 800 to 810 for a few more days or few more weeks. But from an investment purpose, this is a good opportunity to buy the stock at current levels, accumulate it. You should be seeing the stock moving up to around 900 to 920 levels in probably a month or two.
Right, 920 to 940 levels in a month or two. That's potentially offering a good upside as far as Tata Motors is concerned. It's currently hovering around that 807 sort of levels. So good news for investors of Tata Motors out there, and perhaps for those who are looking to make fresh entries. But let's also talk about another auto stock that has been making news today, Hyundai Motors India. Now, Hyundai Motors India plans to set up approximately 600 fast EV charging stations across the country over the next 7 years, prioritizing key highways and major cities by the end. And by the end of this year, the company aims to have over 50 DC fast charging stations operational. Hyundai's existing network has supported 50,000 sessions, dispensing over 7.3 lakh units of energy. The company has also signed an MOU or Memorandum of Understanding with Tamil Nadu to establish 100 charging stations by 2027. This initiative aims to address the growing demand for electric vehicles, infrastructure, and support expanding EV market. Now, Avni, want to get your view on Hyundai as well. Seeing some rub-off effect from this mega capex plan that they have planned. The stock is up about 0.5%, but has corrected quite sharply from its 52-week high. I think the 52-week high stands at about 1970 on the NSE. It's currently hovering around that 1836 mark. Can this be a particular stock? Because if you look at it, Hyundai is one of those companies that has spread across the value chain, whether it's your budget SUV segment, the hatchback segment, the luxury car segment. It's present in all spaces.
So the stock hasn't traded for 52 weeks. It's a recent listing. It got listed in October, so not much of data points to read on technically. But yes, the company, whatever data we have, I think as per that, it is out of the woods. It made a low of around 1730 in the month of November. But now it is stabilizing. It's in the process of stabilizing. So from an investment perspective, again, one can enter at current levels, but also keep some room in case if the stock comes back to around 1800 levels. There you can add more. So this stock, you will have to give time, at least 8 to 10 months, because it's a newly listed company. People will wait for the quarterly results and further updates on the company to, actually develop interest in buying this stock. So, but technically, fundamentally looking good, one can start accumulating the stock and keep a horizon of at least 1 year for a good upside.
Right, keep a horizon of at least 1 year for good upside. That's the view on Hyundai Industries. But let's keep it to the renewable energy space, because Reliance Industries, Larsen & Toubro, Renew and Waaree are among 14 companies that have bid for incentives under India's National Green Hydrogen Mission. Now, the bids were opened by the Solar Energy Corporation of India, or SECI, yesterday, following a tender issued in July for 450,000 metric tons of green hydrogen under Tranche 2. Now, the winners are expected to be announced by January of next year. The government has capped the incentive at rupees 50 per kg for the first year of production. Avni, again, let's first talk about Reliance Industries, because the stock has witnessed some bit of a selling pressure in the past week. If you look at it, in the last 5 days, it's down by about 2%. Even today, it's, in fact, it's down about 0.4%, and it's the biggest negative contributor in the Nifty 50 constituents of stocks. What's your view on Reliance Industries?
So Reliance Industries is one of the favorite stocks of most investors in the market, and they would not like to hear what I am going to say, but I'll stick to the facts. The stock is still looking weak, and it has failed to break above the 1325 range, and it can come down again somewhere around 1250 to 1260. So some more downside left, and post that we'll have to review again. There are no buying triggers as of now.
Right, let's also talk about Waaree Energies. The stock is seeing actually phenomenal movement in today's trade. The stock, as we speak, is up about 4%. It's hovering above the 3050 levels. Again, Waaree Energies has been one of the stocks that has delivered phenomenal returns to investors. Avni, in the last 1 month or so, from what I can see, the stock has gained by about 9.5%, 32% over the course of 2024. But year to date also, in fact, it has just listed. So the stock has delivered good and healthy returns for investors since listing. Again, at 3092 sort of levels, is it a good buying opportunity?
Yes, so whoever could buy at the lower levels, do not get overwhelmed with the 1 month returns, because you have a lot more to gain from the stock. The stock is heading towards around 3650 levels. It's a good time to accumulate the stock at current levels also and stay invested. We will be seeing around 3600 levels very soon. It's a blind buy on this particular stock.
All right, blind buy on this particular stock. That's the view coming in from Avni Bhatt, Senior Vice President at JM Financial. Avni, stay with us. I have another stock for you. Brookfield India Real Estate Trust, or REIT, has launched its qualified institutional placement, or QIP, issue to raise up to 3500 crore rupees by issuing shares to institutional investors. Now, the QIP approved by the company's board has been set at a floor price of 287.55 per unit, with the unit closing at 290.73 on the BSE. At a discount then, the funds raised will be used to repay borrowings, finance capital expenditure and support future growth opportunities. Brookfield India REIT owns a portfolio of 10 Grade A assets across key cities, totaling 28.9 million square feet of leasable areas. Now, REIT stocks, Avni, have not done particularly well since they have launched. I mean, I think the 4 or 5 listed companies from in the REIT space have not delivered good returns compared to real estate sector on the whole, which has delivered phenomenal returns to investors over the last 12-15 months. But a big push coming as far as raising money from qualified institutional investors, so they are planning for that capex push in the coming months. What's your view on Brookfield India REIT, ma'am?
So not very excited on the stock. I would rather stick to the momentum reality names from this particular space. I would still wait and watch for this stock.
All right, with that, Avni, I'll have to let you go. Ma'am, pleasure speaking with you. Great insights from you as always.
Thank you.
Alright, before we wrap the show, let's also look at some of the stocks that are actually contributing to the rally in today's market. Actually, the market is trading with a flattish bias, but it's moving higher from that 26,000 odd levels. And let's look at the heat map that's on your screen, visible on your screen. HDFC is moving towards that positive range. In fact, again, HDFC Bank and ICICI Bank are the two biggest contributors in that Nifty 50 basket. So a bit of upside over there, even if it's a small upside, will help push the markets higher. As you can see on your screen, HDFC Bank is up 0.11%, ICICI Bank another positive contributor. TCS, which remember was in the red in the morning trade, has in fact turned a corner and it's now in the green. Reliance Industries still remains in the negative, so that could be a problem and that could be a stock to track, and Avni is not too optimistic about that. But with that, we have completely run out of time in this edition of Morning Brief at 9. Thank you for watching.
In the fight against child rape and murder, the police plays a crucial role. Their involvement is both proactive and reactive. It includes interventions at the prevention levels and investigation levels as well. Since the Nirbhaya case in 2012, which led to tougher laws against rape, little appears to have changed. But stopping crime against women cannot be left to the police alone.
This and more. Streaming on NEWS9 plus news is now content. Subscribe and get free vouchers.
The beauty is of leadership being able to acknowledge and flex and mold and inspire and get the best out of their people.
Unfortunately, there's no holy grail. There can be an organization that's the darling of the markets, doing well, delivering results.
If Shakespeare had been there, I think probably he would have written another tragic comedy.
The wages, the work conditions of these white-collared workers is far better and much higher than those of blue-collared workers.
Unfortunately, that is what I believe has deteriorated and deteriorated big time.
There could be regional offices, there could be country-specific offices where the atmosphere is very toxic, and this is reality.
On human narrative of how corporate India or any corporate world functions, sadly.
So generally in the beginning, when the white-collar jobs were on the rise, it was felt, especially by the white-collar workers, because they were too self-centered, individualistic, and they did not feel the need to come together and bargain for better work conditions, safety at workplaces.